All right, so this week I bought some Activision twice actually. Once at $46 and I sold call options at 46. So willing to get the shares called away in a month, so expiring March 1st, but I collected $236. So that's about 236 divided by a 4600 investment. That's about 5% in 1 month. So if that's the strategy I'm going for, can't complain with 5% in 1 month. And then the stock dropped all the way down to 42 something. So I bought some more at 43.4 and I sold once again call options, but this time I sold at the same strike price as the previous one, 46. So I can combine both call options come March 1st if I have to. So I'll save in fees. And I sold the 46 call option at $1.55 because of course the stock dropped, so it's not worth the same. If I had sold at the same price I bought it at, it would be worth more, of course, but I wanted the same strike price as the other option and the same expiry date. Basically, I wanted the exact same option. So I collected 155 on 43.40, so that's 3.5%. But that doesn't include the difference between 46 and 43.40. So that's would be an additional capital gain of $2.60 per share. But now my new average price is lower than 46. So if my shares get called away at 46, I'm not going to care because I'm going to make an extra profit on the capital gain on this trade, but also on the other trade because my average price is lower now. So my average price being 44.7. If my shares get called away at 46, so my total gain on this would be 46 minus 44.7 plus the $1.95 that I collected from the call premiums times 200 shares. So total profit would be $650 divided by, well, let's remove the fees first. So $10 in fees for buying minus 25 for getting the shares called away, and for buying the options $22. So I'll be left with 593 divided by a total investment of 89.40. That would be a total return of 6.6% in 1 month. So expiring March 1st. If Activision is trading above 46 come March 1st, then I'll make a guaranteed 6.6% profit in 1 month. So not bad. I also bought Twitter at 30.5 and sold call options at 31. Also willing to get my shares get called away from me. So 164 divided by 30.50. So that's 5.3% in 1 month. But if my shares get called away, I get an extra 50 cents because I bought it at 30.5 and the strike price is 31. So if my shares get called away, I would make 1.64 plus 0.5 times 100 minus the fees, which is about $41, everything combined, divided by the investment of 30.50. So it would make about 5.6% if my shares get called away in about a month as well, expiring March 15. So now going back to my United States Steel that expires today, February 8th. I bought the stock at 21.8, but I sold the second time around, I sold the strike price of 20.5. So now if my shares get called away, they'll get sold at 20.5, but I bought it at 21.8. So I would lose about $1.30. But today the stock dropped. Let's go see what it's trading at right now. So the stock is trading at 22.46. So that would mean the option is trading lower, probably below $2. It's probably going to be trading at 22.3 minus 20.5. Let's see what that gives us. 22.3 minus 20.5. So it should be trading around 1.8, 1.9. So let's check it out. So yeah, it's trading at 187 and 191. So if I want, I can actually buy back the call option at 1.9, for example, and then sell March 15 at a higher strike price. Let's say if I sell 22, which is okay because I bought the stock at 21.8, I could collect $1.33. So I would collect $1.33 from the premium plus an extra $1.50, the difference in the strike price, but I'd pay 1.9 for that. So I'd be up 93 cents by giving myself an extra month. That's if the shares do end up above 22 come March 15. So that's not bad either. Or actually, let's see what happens if I buy it back right now at 1.9, for example. So 1.9 negative, but then sell the 22 of today's expiry date. Sell it at like 44, let's say. So collect 44 cents. And if the stock stays above 22, Actually, that's not good because I'm better off selling the shares. I'd collect an extra 20, collect an extra 1.5. Yeah, no, not worth it. Plus fees, I'm down everything. Yeah, so either just let my shares get called away at 20.5 and I make my 3% per month instead of the 5% that I was making with United States Steel, or I just buy it back and then sell the next month, sell until March 15 expiry date, sell at a higher strike price. So I guess I'll decide at the end of the day. So Micron dropped hard today, almost 3%. It was trading at 41 this week. Now it's at 38.34. I sold the 36 call option on it, so but I think it expires on February 22nd, I believe. So I still have time. Hopefully it stays below 36 come February 22nd so I can keep the shares and sell other call options against it. Amazon also dropped hard. It's back in the 1500s. I placed a trade today in my RSP. Amazon at 15.15, 2 shares at 15.15. Hopefully it gets executed. But I mean, even at this price, it's not bad. But the last time I bought it at was 15.15, so just want to buy it at the same price or lower. Don't want to buy it higher. Activision also dropped again today, 43.12. Cascade, thinking of buying Callaway Golf, but I don't think the options on it are interesting. Go look it up on Questrade. So let's say March 15. Let's say we buy the stock at 15 and I sell the 15 call option. So it's trading at around, let's say 75. I collect $75 minus the fees. So I'm left with 34 divided by 1500 investment. Yeah, not worth it. If I buy 200 shares, then 0.75 times 200 minus the fees of 42 divided by a $3,000 investment. That'll be 3.6, and that's at the money. So it's not that great, I find, for at the money call options. And at $16, well, it's even smaller, but I would get an extra dollar from capital gain. So it's not great for call options, but it would be great for capital gain. I mean, buying it at 15 and then selling it a little bit later at 18, 19 wouldn't be a bad trade. Orange as well dropped hard today. Option wise, it's not great, but it's great for dividends. It's paying right now a yield of 4.42% dividends, and it's got a 1-year target price of 21. I think it's got a buy rating as well. L brands dropped hard also. Well, not hard, but trading near 26. Let's look at the call options for that. So 26, if I sell the 27.50, for example, I'd collect $1.20 plus a difference of $1 in the strike price minus the market price. So let's just look at the call option alone. So $1.20 times 100 minus $11 fees divided by 26.50. It's about 4%, so that's pretty good because I still have room in the capital gain of that I would get if my shares get called away at 27.5. So if I include the $1 plus the 1.2 from the call option times 100 shares minus, in this case, if it gets called away, I have to include the $25. So my total fees would be around $41. So 179 divided by the 26.50 investment. So that's 6.7% in 1 month. Not bad, of course, if my shares get called away. So you know what, I might place a trade on that actually. I don't have any room in my TFSA, no room in the TFSA either, no room in the RSP either. TFSA, got some room in the margin account, so it's going to cost me interest. All right, so I'm going to place an order on L brands, 100 shares at $26 though. Good for the day. Buy. I'm in my margin account. Yeah, so 100 times 26, send order. There it is, L brands 126. If it gets executed, then I'll go in immediately, sell call options against it. Wow, Electronic Arts took a crazy drop. First of all, it dropped from 92 to 78 on Wednesday. I was actually thinking of buying it, but I bought Activision instead. And now look at it, it's back at 91. So in 2 days, you could have made, just from the stock, could have made 91 divided by 79, let's say. Could have made 15% in 2 days just from the stock of EA. Ridiculous. But if I had bought this, I would have probably bought it at around 80, and I would have sold a call option against it. So I would have been able to take advantage of this crazy jump. But if I just bought the stock just to sell the shares later on, then I would have sold it immediately at 91 for sure, getting 15% in 2 days. All right, that's all for today. If you have any questions, leave them in the comments section below. Like always, if you're going to open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get between $25 and $250 back, depending on your deposit. Thanks for watching.